Lots of talk about the end of easy money here in Davos, and people wondering how quickly that process can go without disturbing this great global recovery we have. You've had 3 rate rises since last summer. Have we got to the point where we're more worried about inflation than we are about slow growth?
Not quite. I think the end of easy money is a little too simple, Stephanie. Fact is that it's likely that money is going to remain easy for some time yet, because the economies are still working their way through a lot of underlying stresses. It's all about this notion of what is normal. Well, normal moves around depending on what's going on in your economy, like riding a bike uphill, and we still have some upward slope to go.
But you say that, but you actually are surely pretty close to full capacity in Canada.
Yes, we think we're operating very close to capacity, certainly in terms of output. But we do think there's considerable slack remaining in the labor market. And what happens at this late stage of the cycle is that investment becomes a principal driver of growth, and that builds more capacity, pulling that capacity out of the labor market and raising potential output in the economy. So that's the sort of checklist right now, that we're watching those ingredients as they unfold, and we can see that it's underway.
Everyone here this week has been thinking, are we being too complacent, looking for things to worry about? There's general agreement that the corporate debt side doesn't pose the same kind of concerns that it might have done back in 2006, 2007. But households, particularly in Canada, you're looking at very indebted households. And yes, you've talked about worrying about the impact on growth of raising rates on them. So how are you judging that?
Well, that's right. That's a vulnerability that we carry into this next phase of the cycle, that almost any shock that happens now will have a magnified effect on the economy because of that debt overhang. And in particular, as we're moving rates gently higher, every rate rise has a bigger effect on the economy than before.
But does that mean this long period of easy money, you've made people build up their debt, that you've now got, almost central banks have got nowhere to go? That you're sort of damned if you do, damned if you don't. Very much less room for manoeuvre.
I think it changes. Well, fundamentally, I think there's truth to that, which is that the so-called neutral rate of interest is probably a lower number. Not dramatically so, but a lower number than what we used to think, for various reasons. And one of them would be the debt overhang, because the economy finds a new place where interest rates have a much more effect than in the past. So that's one of the things that we have to learn by probing, by moving our way along and assessing gradually how things are evolving. We can't know that in advance.
A few people have said here, we can stop talking about secular stagnation. Do you think so? Come up with a new buzzword?
Frankly, I never did talk about secular stagnation, except to think it really wasn't the truth. But I think there was always an element there which had truth, which is that we are globally moving to a slower growth path for demographic reasons. And there's just no choice about that. That's the baby boom, and the baby boomers are retiring. That slows labor force growth, so the trend line will be a lower number, but that's not stagnation.
Okay, well, I've got to ask you about Nafta. A lot of people here waiting to hear the president's speech later, wondering what will happen with the America First doctrine. But you could say that Canada's already been the biggest victim of America First. You've had the most trade actions against you by the US in the last year. You're stuck in the Nafta negotiations. What do you think about that? Are we now heading in the wrong direction on the negotiations?
Well, I'm not very close to those negotiations. I'm still hopeful that there's progress being made. But what is more important to us at this stage is that companies don't know, just as you've just expressed. And companies are making investment decisions every day. As I mentioned before, we're at the stage where investment is supposed to be a principal driver of the recovery.
And President Trump last night still saying it's a horrible deal, at the same time as your foreign minister, Christopher Freeland's trying to say positive things.
Right, so would you, as an exporting company, make a 5-year investment decision today? And I think the answer is no. I'd wait to see how it goes, or if I already have an American plan, I might expand that.
So how are you factoring in that impact on the economy of that uncertainty?
Well, investment is lower today than our models would suggest. We still think investment is picking up, but it's below where we'd expect it to be, and we think it'll stay below.
But can you quantify an effect already of the NAFTA uncertainty?
We've built 2% lower investment profile out through our forecast horizon.
Just because of the renegotiation?
Just because of that uncertainty effect, yes.
Okay. The dollar, currencies. The last time a president was here, the US president, it was the era of a strong dollar is in the national interest. That seemed to go by the way at the beginning of this week. Then Donald Trump was actually talking up the dollar yesterday. Do you think it's helpful to have all this kind of different conflicting signals coming out of the administration?
Well, as a central banker, I don't prefer not to talk about currencies at all, except to perhaps interpret their movements.
Do you think they should maybe not talk about it at all?
Well, I won't comment. That's politics. In my case, I just think exchange rates are what they are. Companies take them into account. Central bankers take them into account. And we just don't talk about them.
How do you think of the impact of that, of a weaker dollar this year? But you've also got the tax cuts maybe boosting the US economy. How does that, on net, how's Trump been for the Canadian economy?
Well, objectively, all of those shocks have to be injected into a forecast in a positive way. They're boosting US economic growth. But it's a full endogenous system. There's lots of other moving parts. We'll have to wait and see how that turns out.
But if you have a big weakening of the dollar, surely that is going to maybe help you a little bit along the way, help tighten a little bit regards to the Canadian economy.
Well, if the Canadian dollar rises against the U.S., it tends to slow down exporting on the margin. But it's not the most important effect. The most important effect to Canadian exporters is what is the growth rate of the U.S. economy. The exchange rate matters, but it's not the main thing. And
you're factoring in faster growth because of the tax cuts?
Yes, we are.
Okay. When you look back, do you think that in Davos we're actually focusing on the right things? When you talk to people, do you feel like they're being complacent? Are you getting this sense of sort of pre-crisis feeling of complacency? Not really. I mean, I think it's not that long ago that we were talking only about crises. In fact, it's the first Davos I've been at where we haven't mostly been talking about either a recent or a next crisis. So I don't think of that as complacency. I think it's given us room to talk about some more fundamental things, which is actually helpful. And do you think the presence of President Trump is going to make the meetings today more interesting or be a distraction? We've had people hanging over the balconies trying to see him. I've seen that. I mean, I guess I'm expecting a lineup to get into to hear him speak this afternoon. And you'll be lining up? I'll be, yes.